Keep your hands off of my scalp.
Good morning, everyone, and welcome again to our Comfortably Disturbing series. It certainly is a crazy world that we're all living in at the moment when you consider what's happening down in Victoria with COVID-19 and also what happened in Lebanon earlier this week. It really does highlight just how fragile life is and just how important all of our roles are in society. Last week, we emphasised the importance of project management during the estate planning process and how ensuring that all of the professionals are in alignment is key to ensuring that we get the best estate planning outcome for our clients. Well, today our co-founder, Ian Macpherson, will be updating us on how businesses are taking advantage of finance opportunities. Welcome, Ian. I hope all of the machinery has gone from next door and that you'll be able to bring us up to date without too much interruption.
Morning, Craig. Thanks very much for that. Yes, I'm hoping there aren't any disturbances or tradesmen coming to the front door to ask if they can do something over the fence today, but we'll see how we go. I've at least put the dog away, so we hopefully won't get that interruption as we go.
We'll keep our fingers crossed. Mate, it's been a really testing time for all industry so far in 2020 with COVID-19. What are the statistics telling us about small business?
Yeah, it's been an exceptional year so far, and we've touched on it a little bit in previous webinars, and we're seeing some extraordinary responses in the sector, particularly from the government. But I think if you look at small business in this country as a contributor to the economy, you see some interesting numbers. I was actually joined a presentation from Prosper last week, and they quoted some government figures suggesting there are over 2.4 million SME businesses in Australia, large businesses, and of these, over 90% of them are SMEs. So their employment contribution to the economy is like 45% of Australia's private sector workforce. So it's a significant piece of the employment sector. And any wonder the government is so targeted to trying to support this part of important part of Australia's economy. So the other thing I did was do some research for from the ABS, the Australian Bureau of Statistics, and they've got a pack on business impacts of COVID-19, and they do a survey on it. This one's dated July 2020, so it's the most recent one they've got out there. 47% of all businesses, including large corporations, reported that revenue had decreased in the previous month. For the next month, 27% expected revenue to decrease even further. And there's a 49% group that say that it's expected to stay the same. These stats are sort of interesting month to month whilst we're going through COVID, but realistically, it's the last question that they asked all these businesses, and they said, you don't see too many significant changes from, June to July, July to August, but what is your change in business activity from July 19 to July 2020? And multiple businesses reported that, operating expenses have increased due to requirements around cleaning and hygiene, personal protective equipment, deep cleaning of their office spaces, having to provide hand sanitizer, etc. And these sort of measures were really impacting on their business, and also obviously their income had decreased during that period. Some of the businesses though responded and said that in contrast, indicating that working from home arrangements had decreased some of their costs. But many commented that their expected revenue and operating expenses were heavily dependent on whether the government regulations would be changing again or staying the same, specifically those regarding social distancing and travel. And there's a couple of interesting, stats and bullets from the ABS. When support measures are no longer available, 10% of these businesses are expected to close. And that's the respondents. And I think there were like 2,200 or 2,500 respondents to this last survey. And 10% of them say that if they don't have the government support, they're going to have to shut. 54% of them received government support via boosting cash flow for employees, and 11% of them reported difficulties in finding staff. So it's having, wide-ranging effects this year.
Mate, you mentioned just then that 10% of businesses are likely going to close after the support measures are no longer available. What financial assistance has been put in place to support SMEs?
So this is the economic response to the coronavirus from the government. Look, just a bit of housekeeping before we get into this. I'm not providing financial advice here for small business or for anyone out there participating in the audience, or tax advice. I highly recommend you seek your professional in that area and get the advice that you require for your specific needs and requirements. But let's start with the most obvious stuff that the government's done. So much of the response to COVID-19, quite rightly, has come from the federal government. We know the economy is heavily dependent on the small business sector, and it simply won't survive with a lot of these lockdowns, shut borders. We've seen what's going on in Victoria at the moment. The border to Queensland and New South Wales is either shut now or likely to shut very shortly. And it's having a massive impact on the SME sector. Conversely, there's been some interesting pivots, if I may use that term. Good examples, some of the boutique distillers out there converting their waste product into hand sanitizer. This is smart thinking and meeting the market. But if you look at the support measurements that the government stimulus packages have been designed to support families and businesses, there's Home Builder. This is to kickstart the building industry. There's $25,000 grant to either build a new home or substantially renovate a house. And this includes the First Homeowners Grant Scheme. JobKeeper, if you haven't heard of this, you must be living in a cave. Everyone's talking about it and everyone's participating in it. And I'm fully supportive of that. I think that's a great measure. So if your revenues drop 30% or more year on year, you can claim $3,000 per employee or small business owner. The JobKeeper extension has been announced, and it's now out to 28th of March 2021. There's another measurement there for individuals and households. If you're an eligible senior, pensioner, carer, or qualify as a student, you get $750 per adult in the household. Businesses and employees, there's a range of activities covered here, including JobKeeper, cash flow to pay bills for apprentices and trainees, safety net, and so on. And there's also flow of credit to directly support the SMEs.
Sorry, mate, the flow of credit, what does that mean?
So specifically, there is and they're calling this, it's a nice little handle, isn't it? The Coronavirus SME Guarantee Scheme. So this scheme is aimed at keeping the flow of credit available to small to medium enterprises. So the government's providing a guarantee of 50% to SME lenders to support new short-term unsecured loans to SMEs. So 50% of the loan will be guaranteed by the government, allowing freer flow of capital, by the financial institutions. So what we see in times of deep financial stress is the first thing banks do is they shut the door to new clients. They stop lending to new clients, they focus on their existing clients. The second thing that they do, if they've got a white label fund that's going out to some of the smaller business lenders out there, they stop the flow of credit to them. So they stop supporting those third party borrowing pools of money. So the whole system shuts down. And the idea the government's got here is if they can continue to support the lenders, they'll continue to lend to the business sector and keep the flow of credit going to small, medium enterprises. So this is what happens when you have an uncertain market environment, and it's great to have the government supporting small to medium enterprises in this way. So the scheme guarantees up to 40 billion of new lending. It assists otherwise, viable businesses across the economy facing significant challenges to cash flow. The participation is through 44 accredited lenders in Australia, and it's coming in two phases. So eligible lenders offering guaranteed loans up to the 30th of September 2020, and it includes SMEs, sole traders, non-for-profits with a turnover of up to 50 million. The maximum loan size is 250,000 per borrower, and the maximum term of these loans is 3 years. So the benefits are the initial 6 months is a repayment holiday, and they'll lend against unsecured assets. Then it changes from the 1st of October 2020, and it alters to the loan purpose will include investment initiatives, so businesses investing in themselves or new business opportunities. Maximum loan size increased to $1 million, and the terms are up to 5 years. However, the repayment holiday will then be at the discretion of the lender. So that piece will change, and it can be against secured or unsecured assets. So these loans in the second phase will be up to and including the 30th of June 2021. Existing small business customers enjoy government exemption from responsible lending obligations for lenders for 6 months. So, you know, that's another measure that they put in there. Just one thing to remember, when you're looking at this, they're increasing the flow of credit and making it available to small to medium enterprises. But the government is guaranteeing 50% of the loan to the lender, not the borrower. The borrower is still going to be obligated for that. Other measures they've put in place through the Office of Financial Management, they've ensured the flow of credit by investing $15 billion to support the warehouse facilities that I mentioned earlier, used by the smaller business lenders or the neo-financial sector. And again, the aim is just simply to keep the flow of credit available and to keep small to medium enterprises liquid and able to operate during these times. And lastly, APRA has made some temporary changes to banks' capital adequacy ratios, allowing them to keep the door open and lend more during this time. There's boosting cash flow for employees. So, you know, if you missed it again, this is providing temporary cash flow to SMEs lodged through your BAS statements. Information is available on the ATO website.
So, mate, all of this is to assist business to stay afloat or to help whilst they pivot what market they're in. Have you got some examples of these loans that are available to SMEs?
Sure. So I've been doing some research and having a look at what's out there at the moment. And most of the 44 have got something which sort of fits within a similar framework of the guidelines set down by the government. Westpac, for example, has got an unsecured business loan. This is written underneath the government 50% guarantee. If the applicant's successful, they get a 6-month repayment deferral with interest capitalised. There are no monthly or establishment fees, so that keeps the initial costs down as well. And they've got the door open for the usual unsecured business loans and overdrafts as well. I also looked at Prosper's response to COVID-19. They've got two. They've got the back to business loan and the back to business line of credit. The business loan is a lump sum, $250,000 to cover one-off cash flow needs, 24 months, no fees payable for the first 6 months, no asset security required, and it's supported by the federal government SME guarantee scheme. And then the back to business line of credit is exactly what it says there. It's same rules as above, but you get to draw down as you require the funds or repay them if you don't need them any longer. ANZ have got another one out there, but they're basically supporting their business customers through business vehicle and equipment finance, business loans and overdraft, business credit cards, and all the merchant point of sale services. And look, if you do a quick trawl through the internet, you will find similar loan facilities coming through from places like Moola, Judo, all the way through to the major banks, etc. George has just thrown up that screen from my AFG portal, and that's the list of business lenders available through the ACL here at AFAN. But you can see there's a huge variety of places you can go to. And again, when you're looking for business finance credit, it's started a few obvious places. Talk to your accountant, talk to your existing bank, and then start making some comparisons. So that was a pretty interesting loan as well that I saw that came through my inbox this week. You know, Banjo's one of those new to market, well, not that new, 2015 lenders started by former executives of the National Australia Bank. You know, this business model is to go totally into the cloud. I think you set up the shell of the application simply by taking a selfie and then showing your credit card. Sorry, not your credit card, your driver's license front and back, and you're already in the system for them. But this particular loan just shows what banks or other lenders out there are doing at the moment, trying to make sure the flow of credit remains in circulation. So this is actually an accounting practice whose receivables had slowed down from their clients dramatically due to COVID-19, and they wanted to stay in business, but also to support their clients. So they sought a loan for $350,000 to extend terms for their own business customers so that everyone can stay in business. And they turned that thing around after the application was put together in one day, which I think is pretty impressive even in these times.
It's incredible, mate. When Georgia put up that screen before with all the providers, there were a lot of names that I didn't recognise, but all of those are available through AFAN by getting in contact with you, obviously.
Absolutely. And I think that points to, you know, some of the previous things that I discussed. You know, you've got Commonwealth Bank, Westpac, I think NAB's up there potentially, but the major lenders are the ones that, through their white label and their warehousing facilities, fund some of the smaller lenders. So this is the government's initiative: make sure that those lines of credit going to the third party through these warehouse facilities don't get shut off. Because if they do, then some of those, like the Prospers and the On-Decks and those things, start to disappear. You lose the competitive advantage of the marketplace, and you lose some of the avenues for these financing arrangements.
And mate, what else is assisting the SME community during this pandemic?
The other thing the government's done is change some of the rules around the instant asset write-off. This has been augmented as a response to COVID-19. So it's been increased from $30,000 to $150,000, covering the period of 12th of March 2020 to the 31st of Dec 2020. And this is for businesses with a turnover of less than 500 million. So it's pretty significant who can participate in this one. So it's been increased in two ways: up from $30,000 and 50 million to 150,000 and 500 million. What happens 1 January 2021 is yet to be determined, but like many of these sort of emergency measures that have been put in place by the government, they change as we go forward. I think we saw that with JobKeeper. There were so many different changes. We were talking to those accountants the other week, Craig, that mentioned that it was almost like on a daily basis, the updates they were getting as to how the application process worked and how you access it and who can qualify for it, what types of businesses and so on. It was changing. So same thing with all of these measurements. It's changing as we go forward. But this particular one, the instant asset write-off, is now, you know, it's available for new and second-hand assets, you know, which is a huge boost for the car, light truck, small commercial vehicle sort of market if you're using it 100% for your business. If it's for a car, the deduction's capped at the luxury car level, so you've got to remember that. It comes with an accelerated depreciation scheme, but you may then, you know, forfeit some future entitlement if you use that. Again, talk to your tax professional. It has to be, if it's plant equipment or machinery or whatever it happens to be, it has to be installed and ready for use on or before the 31st of December to qualify. Can't use it for any private use whatsoever. And look, if your business is already in a loss-making position, it may not be of any benefit to you at all. So you need to investigate that. doesn't cover any leasing or rental arrangements. When we get to January 1, 2021, who knows what they're going to do, whether they drop it back to the previous level or whether they come up with another temporary measure during an extended COVID-19 emergency situation. But, before we get to 31st of Dec 2020, think about it as something which might be able to, help you or your clients upgrade things such as their IT or their office fit out if they've moved from the city to somewhere else. It could be used as a write-off for that sort of thing.
And mate, once we see the end of the pandemic, how does small business recover?
Yeah, well, when are we going to see the end of the pandemic there, Craig?
Who knows?
We're at second wave, and who knows whether we get to third wave. But look, like all business models, you need to think about how you're going to get the business back into profitability going forward. So take advantage of what you can when it comes to government grants. Manage your cash flow. This could potentially incorporate creating new revenue through borrowing, changing how your business, accesses the market. Make sure you get the support that's been made available for, self-employed segment if you're in that position. A large percentage of business cannot actually restart without some sort of loan to purchase new stock, expansion, or, as we've talked before, try and pivot their business into some new area. Have a post-COVID-19 plan. What is that plan? Has the business totally changed direction? If you're lucky enough to be in the 90% of SMEs that think they're going to survive, and I encourage you to go to the ABS website and have a look at some of the interesting statistics on there. Have you changed that direction? Are you going to survive? And what does that business now look like? What happens, and you've got to consider this, when the accommodative government stance is removed. Start thinking about the next 30 days, 60 days, 90 days, 180 days. What does it look like for your business now? How has it changed year on year? Because it literally is just a year ago that all this started to happen. Always, first port of call, go and speak to your accountant. Have a look at, Xero or other accounting packages if they've got some tools that can help you with cash flow management. Or look at other cash flow management software like the one I think Georgia had on the screen earlier, which is the Be Easy one. This environment's not predictable with the second and third wave of the virus, coming. But if you don't have any plan, or you're not trying to trim business expenditure or look at how you're going to create new revenue as you go forward, you're just not going to get there. Some of the interesting stuff that's happened, particularly in the lending space, has been, video recording of client interviews is now just totally acceptable. It's been around for a couple of years, but there were so many rules around, time stamping and that sort of thing. But Zoom, Skype, Microsoft Teams, etc., are all now, acceptable ways of identifying clients and having meetings with them and documenting those meetings. E-sign documents for, eligible for individual borrowers and companies. In the last week, I completed a refinance for a private client that was actually in the consumer space on a home loan, and neither the client, the bank, nor myself ever got in the same room. Everything was done via video link up, and all documents were prepared, identification taken, the application and document execution approved and signed off electronically. So we have moved to that. COVID has moved us into that space where we all hope to be at one point, where this stuff's sort of acceptable. So I guess, what I'm saying is the borrowing in this market environment is getting easier. You've got the government helping you and you've got technology helping you. If it's something that's going to make your business move forward, well, you need to try and access those things. And other ways you can streamline your businesses is by scrubbing your bank statements, getting them through bank statements online, Yodlee and others that you can plug into cash flow management software or spreadsheet or however it is that you run your business, to find out where you're spending the money and where you can trim it. And another thing which you and I have discussed, Craig, is clients, if they're struggling with their risk premiums or their financing costs, these are two of the biggest things that they need to be on top of. Perhaps give AFAN team a call and let's open the discussion and see what we can assist with. I mean, it's times like this you simply don't want to drop those things.
I think you're right, mate. I think most consumers in Australia have become quite apathetic in relation to reviewing their loans with their institutions. And you get into a habit, you're with the one institution and, if you don't approach them about sharpening the pencil, they'll just continue charging whatever they want. And, if you're not focusing on that regularly, you could be paying far too much for your commercial or private loans. And, we're all like that. And when we've got expenses coming up and revenues dropping, then, we tend to start cutting things that we don't feel are that necessary. And insurance is always on the top of the list with most consumers. But there are other ways. They've just got to do some investigation, and risk advisors and financial planners often don't have the expertise to help them. But, it's great that you're available to assist them with that. So I would certainly encourage everyone to do that, because it's at times like these where, stress levels are very high for a number of reasons. That's when we get most of our claims. So what we don't want to see is clients' insurance policies lapsing because of cash flow issues. Now, I think, mate, we might hand back to Georgia. And I'll just say to the listeners once again, as with all of our webinars, if you have any questions for Ian, just type them in and send them through to Georgia. But I'm sure that a few have come through already. Georgia, I'll hand back over to you.
Thank you, Craig. One question,
That's
you
right
mentioned
here.
Boosting cash flow for employers.
Yeah.
Can you please expand on that a little?
Sure. Well, first port of call for that is go to treasury.gov.au. There's a load of information on there, but the boosting cash flow for employers is aimed at the small to medium enterprise, SME, non-for-profit, sole traders, partnership, or companies and their trusts. So you must have held an ABN on March 2020. An aggregated turnover of under 50 million to make yourself eligible for it, and you have to have made eligible payments. So it's the eligible payments are salaries and wages, directors' fees, eligible retirement or termination payments or compensation, or voluntary withholding from payments to contractors. So you've either derived business income in 2018-19 and lodged a 2019 tax return before the 12th of March 2020, or made GST taxable, GST free, or input tax sales. So, it's something you really need to talk to your accountant about. But if you qualify for it, and I can tell you with one of the other businesses that I run, we lodged our, we prepared the BAS, the accountants prepared the BAS yesterday, and I signed off on that last night. It's made the difference between, almost paying a little bit of GST and pulling back $10,000 from this initiative from the government. So it really is aimed at injecting funds back into companies where possible. And like all the other measures, it's about keeping the flow of credit out there, and it's about keeping competition in the marketplace alive and kicking, particularly with that warehousing funding and stuff. But have a look at that. Boosting cash flow for employers. If you're an employer in a small business, you should take a look at that and make sure your accountant's on top of it.
And on that note, keeping up competition, and if we're considering either refinancing or taking out a new loan, what are the market borrowing costs like? What are the fees like at the moment?
Well, I think that example with Westpac about the commercial lending that I gave earlier is a great indication of where they will give you a repayment holiday for 6 months. There's no establishment fees and there's no monthly ongoing costs for that loan. So they're being accommodative. They're passing on what the government's intending and trying to make it easier for clients to do that. But the first thing you do is ask your bank, is there any more room in my loan if I've got an existing one? Ask your bank, do I qualify under this 50% government guarantee this initiative for a 24-month loan or something unsecured to help my business move forward, if you qualify. Do it jointly with your accountant. Make sure that you're on top of that. Yeah, ask your bank, and then get out there and find a broker, or come and, again, bring us. Call AFAM, we'll have a chat with you. I'm happy to do that and provide some comparisons if there are things which make sense to you out there. So like a lot of the commercial stuff is no upfront or monthly fees, and as I said, that sort of 6-month holiday. Asset finance rates are out there varying from, mid 2s to over 10%, depending on, your borrowing requirement and the lender that you go to. But some of the rates out there is quite accommodative. And we had a discussion internally in the office, I think yesterday, some honeymoon period rates out there for residential. I've seen one this morning advertised at 1.99%, but it's, you've got to be careful. It's an introduction rate for 12 months. And the comparison rate, where all fees and charges are actually added into it, is actually 2.55%. So be careful of those. But other things I'm seeing are 0%, cost for balance transfers on credit cards. That seems to be rife out there at the moment. And obviously, and it's been out there for a long time now, is deferring your payments on your home loan. But again, just remember, it's not going away. Interest is actually stacking up against your outstanding balance. So it needs to be fit for purpose and make sure that these things are suitable for either you personally or your business.
Well, that's all the questions we have. Unless anybody out there has any questions, you can type them in the Q&A. But I'll hand back over to you, Craig and Ian. We still can't see you, Ian, but that's okay.
Yeah, I have been trying to do that, but it doesn't seem to work.
Look, it's probably a good thing that the screen blacked out, mate, because the makeup department didn't do a good job this morning.
Yeah.
But
was I starting to melt?
Thank you once again, mate. Really insightful. And look, it's a complex area, and most planners and risk advisors just don't deal with it. But there are so many opportunities for our clients and consumers in general, and I just find it so valuable to have a resource like yourself that I can pass these issues on to, because I don't understand it. I don't want to understand it, but I just want a good outcome for my clients. Thank you for your time. And Georgia, I'm really looking forward to listening to you, because once again, the marketing is something that I have zero skill in. And I look at the wonderful job that you've done with the building of our brand, but more importantly, I really want to find out about the machine that you've developed that allows us to continually get our message out to consumers and constantly remind them about just how important our services are. So thank you once again. I look forward to hosting in 2 weeks' time. I'm really excited about the topic of next fortnight's webinar. And in the meantime, be safe, be good. If you can't be good, be careful. Talk soon. Bye.